Good morning, traders and investors. Welcome to Friday's Quad Witch edition of Benzinga's pre-market prep, brought to you by Options House. Joe, how late did you stay up watching the NCAA tournament last night?
Actually, I went to bed at like 8:30 last night. No joke. I had to I had to fast all day yesterday, so I had dinner when I got home, and that put me right to sleep.
Now, after that, well, I got to give a shout out a couple happy birthdays here on March 21st.
Happy birthday to who?
To you, I doubt if anyone will know these names: David Tarrant, Kelly Viewage, and Jill Morgan. And do you want to know why I remember March 21st and I remember their birthdays?
No.
Because they were all in my third grade class. Okay. And you know how you used to get treats like when someone had a birthday? Well,
Mhm.
we got triple treats that day. And I never forget March 21st. I had three kids. I mean, I haven't talked to them in like a long time. I used to have a crush on Jill Morgan too, but she never responded. But that's how I always remember that March 21st, the triple birthday on the Quad Witch. How is that for a memory?
That is quite a memory, Joel. I mean, like, I'm sure the older you get, the fewer memories you have to cling to. So that's a really special one, I can tell.
Well, wouldn't I have more memories to cling to?
No, because you've become more forgetful, right? So whatever you can
But I have
remember
more to
is
forget.
what you
That's
hang on to. No, this is a
Joe. I'm not going to
Watchmen
argue with
reference.
you yet.
Brianna, if you're
Okay.
listening, this is a Watchmen reference. Every memory, even the nasty ones, become a little bit brighter the older you get.
Okay. And Dennis, are you still in the trade cave?
I am here. I am ready. It is the witch. We are witching here today. Quadruple witch expiration. Joel, what are those for?
Market index futures, market index options, stock options, and stock futures. But man, it doesn't have the pizzazz that it used to have. I mean, there used to be some really volatile days, and I don't know, Dennis. You're looking at it just like we got a slow drift up today.
Well, like we say, a lot of times stocks tend to open a little bit too high and you get some fair value plays right off the 9:30 open. Back in the day, there would be some ridiculous opens. I can remember back like 10 years ago or, in the early 2000s where you just have stocks open up like $1.50 away from where they're supposed to open. You don't see that too much anymore. You've obviously got a lot more different types of liquidity providers that will offset those, so you don't see it as much as you used to. But at the same time, there's opportunity there always when you've got so many fundamental players jockeying their positions. So as traders, we like a little bit more action, and you do see a little bit more action on the quad witch.
Yeah, we just we had to close, dipped a little bit below the 62.75. Currently trading right near the highs. So we did have, I don't know if you want to call it a triple top or not, but you did have three highs right in that 1867 area. Actually, 3 days in a row. 67 even, 67.50, 66.50, and then so you trading above that level. You've hit 72.50. You got a minor resistance at March 11th high, 75 and a quarter, and then the all-time high of 80.50, Dennis. So you think we're going to hit the all-time high 80.50 before we hit
I think we'll get up in that high 70s and maybe find a few sellers, and it could be early in the session too. We have been slowly drifting up here. Show the pre-market chart there so everybody can get a feel for how we've been doing. But I was checking last night. Now we're up 4 points. We got down to 1862, so we're about 10 points off the overnight low. And as we continue to drift higher, if we do see some buy imbalances this morning, maybe we open up in the mid 70s and maybe we try to test that area. I don't know if we'll have the gas to get through it there today, but you got to give these buy the dippers credit because they come in every time we pull back. They had Fari even fooled yesterday because Fari thought we'd get a pullback. It did not happen. They just came in and started buying. And the financials, holy cow, the financials led this rally. We saw it on the day that Yellen was speaking that the financials really weren't selling off as hard as the market was. And then yesterday morning, the pre-market, they all had buy imbalances. A lot of them opened higher and they never looked back. They just opened and they ran. You had Bank America making new multi-year highs. You had Wells Fargo breaking out to an all-time high. These financials, they're hot right now.
Right. Little sector shift here into the bank stocks. You had the stress test yesterday. Maybe anticipating some positive results from the stress test. When you're looking at this Bankless of America here, I don't think it's traded up at this level.
Years.
I did see an 1815 high, and I think that was back in like May of 2010 or something like that. So. You have to go back a ways to find resistance in these. Hit a nice round number 18 yesterday. Probably a big seller lurking around at that level. So we'll keep an eye on that. $18. Big
The
number.
only the only bank that did fail the stress test was ZION, which is Zion Bank. It's down 44 cents here, so they're not even rocking it that bad. And it's just the ratio. So they put it under stress and they say, what would happen, if another financial crisis, can these guys basically stay surviving there? And the only one that was of concern was Zion Bank. So that's the only one they're really whacking here this morning. But individual financials, they all have their own little individual results. There's, I think, 30 banks that were tested. So you might see a couple trading a little bit higher, a couple trading a little bit lower, depending on their own results. But Zion Bank, ZION, was the only one to actually fail the test.
What region are they in? Do you know? Just out of
Ooh,
curiosity.
Brent, can you hunt that down? Joel's throwing
I
me under
just
the bus here
yeah,
again, so I'll
Yep.
try
sorry.
to throw Brent under the bus.
Yeah, it's I know they're not a province, but I just wondered on a regional
A
basis.
province.
It did have a nice spike yesterday though, and hit a multi-year high as well. Yesterday's session got up to 32.99. Kind of a wild pre-market session here. I'll take a look at it from that perspective. Look at the close. I keep an eye on the close here now that you're trading down 44 cents. You made a multi-year high. Close for that issue's 32.99. 33.33 was the high.
They
I hear,
are
but
based out of Salt Lake City. They operate in Utah, California, Texas, Arizona, Nevada, Colorado, Idaho, Washington, and Oregon.
Okay, all right.
You can't throw me under the bus, Dennis. Don't worry about that.
he's too quick. That Brent guy's good. He hunts that stuff down for us. So yeah, so
Encyclopedia Brent.
there was a lot of rallies and a lot of individual stocks yesterday too. Like we talked about the financials having great relative strength, but holy cow, did you see that rally in AT&T?
Yeah,
That thing
what was
caught a bid off the bat and it never looked back. Look at the first hour of trading in AT&T. No news yesterday. The stock opens basically flat and ran up $1. How often do you see AT&T go up $1 on no news?
Did you get run over on that, Dennis?
I did, and I got lucky. I didn't get run over. I got short Verizon off the bat, and actually I got up quickly. But then AT&T was running so much, I was like, I got to cover this Verizon short because with AT&T running this hard, the Verizon's probably just going to start running too, and it did. So of course, I was short Verizon off the bat. And I'm too stupid to go out and actually reverse it and get long the stock. But I did get covered, not run over on Verizon. But man, there may have been a few people that got run over on AT&T because if you were fading that move, saying, "Oh, this is a 30-cent pop for AT&T, it's too much. Oh, it's a 50-cent pop for AT&T, it's too much. Oh, this is a 75-cent pop for AT&T, it's too much." Holy cow! First hour and a half, it ran $1.
No news. No
No
news.
news.
No news. Good thing I didn't beat up Brent about this looking for news. I mean, it's just been hanging out. The only possible explanation I could come, and it might be a little bit early.
Ex-dividend,
Yeah,
but it's
when's
a
this thing?
ways.
Yeah, when is that? That's early in April. This thing goes on.
Yeah, it's usually the first week of April. They always come out. Verizon and AT&T are usually on the same day. And like we say, a few days before the ex-dividend
Yeah.
date, these often do show relative strength. But man, we're talking about 2 weeks ahead of the ex-dividend date here. So that was a big run. But money was finding a home, was really rotating around. Some of the Momo stocks were actually down yesterday. We already talked the financials were strong, but individual stocks, it's all about stock selection right now.
I mean the Verizon got off the mat too, not such a dramatic fashion though. So maybe if you're looking for some follow through here, this stock is still bumping up here. Not really made a low of the move under 46. You're at 47.21, trading down into pre-market here. So let's see if Rockin' Hilly said someone had some news on it. Yeah, the news is that someone was buying the daylights out of it, but looking for a little bit more conservative investment here. The yield on AT&T probably got pretty juicy down there around the $32, $33 level, but we'll see if Verizon follows suit today.
It's getting a little pullback in the pre-market, though. Interesting. It's down 20 cents on Verizon. I didn't see a headline. Maybe Brent can go hunt down and see if there's anything that is on Verizon because it is pulling back 20 cents with the S&P futures up 4 points.
Yeah, that's not Not that big, but yeah, you're right on a relative basis.
We skipped over gold. Let's talk about gold here because we were talking about that 1320 area yesterday on the show saying, this looks pretty good. And we were right there. A couple minutes later after we were talking, it was already popping up 1323, 1324. Well, we're lifted now. We're trading 1340 here this morning. We're up another $10 here today. So gold comes down and bounces off of that 1320 level.
Yeah, that was nice. It was our. I hope it was our options house trader scooping up gold down at those levels. Uh, the only area of significance here is you had your close from Wednesday at 1341.30. You hit 43 in the pre-market, so that's a little bit of area, I'd say, of consolidation more than resistance. No major resistance here till you get back up to 1360.20. That was your high on Wednesday.
Just some individual miners that are bouncing. I won't start with Barrick because you always pick on me, and I'll start with your favorite Newmont there. NEM. It didn't quite get down. I was hoping it could get down there to the 2390 area because that's where it had found multiple lows before. It couldn't quite get there yesterday. I had my bid out there. Didn't get there. Got only down to 2419, and it started running there off the bat too. Closed stronger, up another 20 cents here. So actually, Newmont trading a little bit higher here and bouncing here this morning.
Yeah, just taking a look at that, we always try and emphasize, the opening price. And even though gold was down, this did open slightly lower, but gold firmed up early in the morning. As it turns out, Newmont Mining opens up at 24.26, and it only missed the low of the day by 7 cents. So if you were bumping up on that support level and you had a little bit of a feeling here, didn't wait for the $24 level like Dennis, you had a good trade because it traded back up all the way to 24.98. Trading up another 50 cents in the pre-market. Let's keep an eye on those two highs, 25.34, 25.62.
Let's move on to some of the news stocks here. J. Dot from the chat's asking about SYMC. Yes, Semantic, I believe, is your big loser of the day. I'll go to my loser board here and see. You got a penny stock that's beating it just slightly, but SYMC is down 9.6% here right now. They're canning the CEO. They did reaffirm the outlook. They are getting downgraded by UBS, downgraded by Baird, downgraded by Cowen, downgraded by Jefferies, downgraded by MK Partners to sell. So the analysts are ganging up and beating this thing up. And SYMC is trading down here at $2.
What did this guy do? I mean, are there any, or what didn't he do? Maybe that's the question. We spiked down initially on that news, right down to, let's see here, 1863. You hit that level, got a little bit of a bounce up to the mid-19s, and then you came right back down to that level again. You came back down to 1860. So we bounced off it twice. You got to call that support for now. You're only 40 cents away or 30 cents away from that in the pre-market. Broke down through the 20 level. I do see a low. Let's see where we can find any.
You got that pre-market chart, Joel? Because right now we're seeing the daily.
I'm sorry. Sorry about that.
We're seeing the daily. We want to see the pre-market action on pre-market prep.
You do. And it's just the only thing to note here is you've come down to this 1860 area a couple times here. It does act as support. Little windfall here for the people that were short the issue. If you go back, see, in 2013 here, you had a low at 1801. So if you don't want to cover at 1860 and it gets through there, 1801 was a big level for this issue.
And we always like to set up other scenarios here for you too. If for whatever reason the stock decides to try to pop up here today, the $20 was pretty major support there. That's where it broke out from in early 2013, and we've never been back under 20 ever since. Now, just a little while ago, obviously there we made the low 4 days ago, right at 20 on the Kisser 2001. So if we come back to 20 area, if you think old support might become new resistance, and look at the Head and Shoulders when you look at it like that.
Not pretty.
But it's all colorful and it's Head and Shoulders, but $20 is probably where they're going to line up, I think, to
forever.
Get forever and ever.
Yeah, yep. Never gonna trade over 20 again.
Yeah, well, we will see about that, but 20 could be a big number for this if it comes back to that area. Tiffany's TIF reported earnings, and they missed. $1.47 versus $1.52, $1.3 billion versus $1.31 billion. So missing the top, missing the bottom. The triple whammy's coming because they're lowering, can't speak, guidance for full year 405 to 415, versus analyst estimates of 428.
Who shops there, anyways? I mean, come on. 87,
You don't
85.
shop there?
No way. No, I think the only thing I have for
You know
Tiffany.
I don't.
Yeah. I think the only thing I have from Tiffany is some wedding gifts that people bought for us, and they obviously didn't know our taste here. Not a lot of volume. 87.80, just sitting there. No one's buying this thing. No one's whacking it anymore. This thing has had a huge run up here, going back over the last couple months. In order to find support in the issue on the daily charts here, just keep an eye on this whole $88 level. We're trading right there right now. You did have multiple lows, really four lows in a row between 87.65 and 88.28. So that's a potential area of support. Just take a look on that. Underneath 88, they just keep whooping this thing. You could see 86, but that'd be overdone. I'd use 88 as a swing number.
Sometimes Tiffany can move $4 or $5 off earnings reports, so just keep that in mind. If you look back to November, we had the gap and go. I wonder if this is going to kind of be the opposite direction, where you have the sell off and fall off further. So we'll have to see. I don't really see that much in the whole 88, 86. Like really, where we kind of broke out from was 85, and that was going back to early February. And then you had like a 2 week run to 90. So I don't know. I don't see that much in here. I think if you're picking bottoms at 88, you might be a little bit early.
Better place to cover short than to go long?
I think so. I think if I was short this thing, I don't know. It's hard to say. Stocks, giving you $3 here off the bat. But they didn't say anything good in that earnings report. So funny things happen. Buy the dippers come in. So you got to be aware of that. Every time stocks pull back in this market, they seem to come back. At least, a few days later. Like look back to First Solar. If you want to
Oh,
talk about stocks coming back, remember like about 4 weeks ago or 3 weeks ago, what was the date there? I think it was earnings, wasn't it, Brent, on February 26th when the stock went from like $60 all the way down to 49.52 in the one day, and then it was back pretty much 2 days later, and then you see the move there 2 days ago. Holy cow, things just taking off. Seems like a lot of times these stocks pull back and they find buyers.
well, they came out with some good news 2 days ago, and I think they reaffirmed guidance for a couple years going forward. And then you got the file through yesterday. I mean, this thing is a tricky one. Doesn't really trade with the Solar City right now. And I tell you, what's interesting in this thing is the spread now on these two things. It's even, and it was like at one point it was like at 15, $20. So we'll see what that how that correlation holds up. First Solar's getting some ground back. This is the highest level it's traded at. Man, you have to go back to November of 2011. The thing topped out at 99.50. Just keep an eye on yesterday's range. You had to close at 70.48. Minor support at yesterday's low, 68.53. The high of the move from yesterday, $3 away from that, 73.74. We'll see if anyone tries to take profits in this one today.
DJ is saying that AT&T moved up yesterday on news communications workers ratifying Southeast Mobility contract. I think you might be reaching, DJ, though. Like you can always find a headline on AT&T. Everybody can always find, and everybody will always come on and try to justify a move with fundamentals. Now maybe that had something to do with it, but that's a pretty big move. Like when is the last time AT&T popped a buck that it wasn't off of an earnings report? I can't, think of a time. I'm
No,
looking back at the charts here. It's been a
yeah,
long time.
yeah. I mean, this stock just is uncharacteristic. Moving it. I mean, you just have to be if you're a trader, and you just have to recognize those kind of days if you're trying to trade the ranges in this. I mean, it had the $33 level. You really couldn't call that major resistance because it traded above it the last 2 days. I think if you were looking at it and you wanted to find like, okay, I'm not going to sell this thing, but if this breaks above 33.50, that was a big number back in early February. So yeah, very uncharacteristic move for AT&T.
And I'll tell you the other thing is it was opening up a little bit strong because we were down like 4 or 5 points there yesterday. And a lot of traders like to do the fair value trades. And when the thing opens up, they'll sell the open. And really what you see is a straight run up there for the first 30, 40 cents. So every single trader that's short of that open is underwater because a lot of those guys, even looking back to loss aversion and stuff, and people don't like covering at loss. They always look to wiggle out. So they'll buy the pullback. When they're wrong on the trade, they'll wait for a pullback, get covered, maybe scratch, maybe only lose a little bit. there really wasn't a pullback. So then you get short scrambling. And then you get other people who are saying, well, it moves too fast, and they start getting in there too. And all of a sudden, you've got like a little bit of a mini short squeeze happening at the same time of maybe, grabbing a headline and then people worrying there's a headline coming out. And all of a sudden, the stock's up $1. So sometimes funny things can happen when, everybody's leaning the wrong way. The short-term traders are leaning on the wrong side.
What if you had 34 calls in this thing that expired today? I mean, that could be. I wonder where the open interest was
You want to
heading.
go look? I'll go look at
Yeah,
the open
yeah.
interest.
What do you get?
AT&T open interest
I bet you
on the 34s. It's 4,700 contracts. So that's not a ton, though. You got to think about a stock that traded 62 million shares yesterday. You're talking about only 4 million shares holding it down at 34. So it can kind of blow right through that. But I tell you, the open interest on the 3450s and the 35s is nothing.
What about
It's
the
400.
30?
It's
What?
400 contracts only on the 3450, only 224 contracts on 35s. There's nothing holding us back. I'm just looking at this thing, and I'm a big fan of the 2-day move. I'm always a big fan. I don't think it's going to pop another buck, but I wouldn't be surprised if you saw like 34.50 today. You want to do a bet, Joel?
Nope. Nope.
Nope, no.
No,
Joel likes
no,
the
no,
2-day
no.
move.
I got a lot of things on my mind today. The tournament tomorrow and stuff.
The
But
madness. He
but
doesn't
yeah,
want to,
March Madness. What about the 33 fifties or the 33 evens? Because that could have been another thing. You could have had, the stock had been under 33 for over a month here. Maybe had a lot of people short the 33 calls here, and once it started to get away from it, they thought it was coming back and maybe got run over a little bit. Is the 33s, or they have 33s and 33.50s in that?
Yeah, they have them every 50 cents on AT&T. It was 1,800 contracts on the
Yeah,
33
okay.
and 2,800 contracts on the 3350. That's not a huge interest for a stock, like we said, that trades 60 million shares yesterday. So I don't think open interest is probably affecting these
Okay.
stocks really, though.
Good
So,
volume, too.
oh, huge volume. That was a huge move. So let's move on here. Nike reported earnings there last night. I got down and dirty, and you can laugh at me
You got
because I
dirty.
shorted. You know me, Joel. I always get in the trade at pretty good prices, and I always get it out at really bad prices. So I guess that's been my
So
flaw for the
where'd
last
you
15 years of trading.
where'd you
Okay, well,
short
we'll
it?
bring up the Nike chart. It had the earnings. First, I'll give you the earnings. 76 cents versus 72. 6.97 billion versus 6.68 billion. That all looks pretty good. Started popping. Now look at the pre-market chart, and you guess where I shorted it. Well,
Uh,
I didn't get the high, but.
I'd say you shorted it in the 82s.
Yeah, I think I shorted. I'm trying to remember. Bring up the pre-market chart. Let's see this. I
Yeah.
think it was around 82. I'm a big fan of this actually.
Whole
Is the
number.
stock so no, I didn't get the 83. I think I was actually only the 81s. But what happened is the stock does the initial pop, runs to 83, and then it starts pulling back and starts pulling back pretty quickly, like a couple minutes after. And it's trading a pretty heavy, like in the 80 and a half area, something like that. Just up about a buck. And then I'm waiting for it because I know once this breaks on CNBC, which is like 5 minutes after the earnings report, it's already had the initial earnings report. It's already come back down. Once it breaks off CNBC and they say, oh, Nike is beat, it's going to pop again. It's going to give you a second shot. And it did. It got up there to 81 cents. It pops $1. And here it is. Everybody's trading on the CNBC headline, all the latecomers to the party. It's already priced out that it's went up and priced back down. It was trading pretty heavy at 80 and a half. So I already had this in my head that this thing's priced at 80 and a half. So it pops up and it's popping, and I'm sitting there trying to get short the thing on the CNBC pop after hours, and it gets up to like 81.30, 81.50, 81.70 starts printing, and I'm like, okay, I'm trying to throw out some 81.70. I can't get done. I'm like, and then some dude comes in for like 10,000, 81.50. I'm like, damn. So it's not going to have enough to go through him. So then I smack the 81.40, and then it starts coming back down. It starts going like 81s and starts trading in the mid 80s. And that's where I thought it was in the 80s. So actually I ended up covering, for like a 50-cent gain or something like that. And then I watched the thing. And over the course of the next hour, I watched the thing fall $4. And I'm like, ah! I'm
What?
like, man,
That was
I
so.
get in these great prices. I got in on the CNBC second pop there, which is always good to do. And now it's down $4. So here, you think, oh, I did well making 50 cents on it. Well, no, I didn't. I took the gains way too soon again.
So it traded quite a bit up there in that
It
that
did.
8.5, 81. Because I'm looking at my 15 minute, and it looked like it had to spike out, came right back down. So you must have been fast and furious. Did they give some bad guidance, Dennis, or what? What happened here?
Brent, you got more details on that report there? because it obviously the earnings report itself wasn't that bad, but I mean it was good actually.
I'm sorry.
So is a guidance on Nike that's knocking it
Oh,
down? What is
Nike.
the reason that they're saying knocking Nike down
I
$3
don't
now?
think I remember seeing any guidance, but the metric that you want to look for in Nike is the futures orders. Futures
Okay.
Yeah.
orders were, let's see, 10.9 billion. That was up about 14%. That might have been a little worse than expected, if I can
And
remember right.
And what time do you see what time the sell-off started breaking? Because they had the call around 5 o'clock, the analyst call, and then
Mm.
you had the CEO talking. I'm wondering if he was saying some stuff there, like
Oh,
he was
no.
saying expected forex
That
headwinds to
was
come
it.
in.
Yeah, yeah, I forgot about that one. Yeah, it was
Yeah.
the headwinds comment. Yep, good
Oh.
call, Dennis.
So at 5:20, like 5:25 on the call, he comes out and says we're expecting forex headwinds to reduce EPS in Q4 and 2015. I think that's when they really started smacking it because if you look at that one bar, it really got smacked right there during the
Were
call.
you
So
listening, or did you just see a highlight of that?
no, I didn't listen into it. I'm just kind of following it. I follow it on the pro too because these Benzinga boys are pretty good as they're. I let them listen to the call and then they rate in
Okay.
Squawk in the Benzinga Pro and they're rating in the highlights from the call. So, I'm too lazy to listen
Are
to the
you ready
calls.
for a revenge trade on the long side?
Revenge trade. Why you got a level for me?
Yeah, I do. Well, we're bumping here around 70. We just made a low at 76.03 in the pre-market. But if you go to the dailies, you have two lows. Right, you have one at 76.49 on February 24th, and then you have another low. Let's see here. That's actually that above that though. 76.55. You have another low. 76.50, Dennis. Right here, right now. I'm calling it support. I think you
What's
can.
the pre-market low?
Pre-market
What's
low
been
is
the low?
76.03.
So we've been a little 50 cents lower there in the pre-market. I'm not picking bottoms on Nike here. I just can't bring myself to do it. But I see the level you're looking at, and I'm wishy-washy on it.
I'll take
So
I'll take 77 versus 76.
I bet you will. I bet you will take 77. We just watched the thing fall $5 from where it was trading after hours there. Oh, 50-cent pop. That could happen. That could happen just on somebody covering the short.
Okay.
Yeah,
All
I'm
right.
not taking you on that
Not
one. You're
taking
trying
it.
to
No.
sucker me into these bets here,
Sorry.
Joel.
And no leverage. I can't offer you any like sweet odds or
Remember,
anything.
that's how you got me
Last
last time. I
time,
was
I
up
know.
three
Oh.
pot belly lunches on you, and then you're like, "Oh, I'll give you odds on it," and I took a bad bet with you,
Yeah.
and it was
Whenever I offer you odds, man, run the other way because
that's
I
it.
know I'm
You
right
got to
there.
watch. He said, Joel, he knows all about those horses and all about betting, and you really got to watch him on stuff. When he's
Uh,
offering you odds, he's probably got knowledge on you, and he's gonna nail you.
inside
So.
information.
Darden Restaurants, DRI. You haven't been eating at Red Lobster or
Red
Olive Garden there
Lobster.
lately because, wow, stock's trading down here. Actually, the earnings came in line. 82 cents versus 82 cents, 2.23 billion versus 2.26 billion. Some adjustments in there, and they're blaming the weather. I mean, obviously, everybody comes out, oh, snowstorms, nobody's going out to eat. Blame the weather. Market doesn't care. They're knocking the stock down $1.30 here to this $48
Oh,
level where
I
this
knew
thing
you.
is trading right
Yeah.
here, right now.
Oh.
This looks like a pretty nice number.
Yeah, it does. I just hit 48 on the kisser. Light volume here. Multiple lows at 48. Not only did you have lows at 48 in early March, you also hit that level in February here. If you're not taking your shirt off here at this area, then you must be waiting for two other levels. One at 47.60. That was the low on the 7th, and then the recent low of the move, and when we had the February swoon, was 47 and a quarter. But sure like to see what happens at this $48 level.
Brent, throwing you under the bus here again. Back in December 19th when we had that big sell-off, was that the last earnings report there for DRI? I'm just doing the math. It looks like it's 3 months ago. And it looked like they crushed it, and then they rallied the hell out of it 2 days later. I'm not saying they're going to do that again, but we always like to look at patterns, and what happens in the past sometimes happens in the future. Brent, was that the earnings report date?
Q2 report was December 19th. They reported about 20 cents.
So they missed that day?
It looks like it was in line to a slight miss. Looked like it was at the lower end of the analyst range.
Similar. So I don't know. I'm slightly interested in this 48 level. I mean, and you know, it's always a little shakeout through the level. He got down to 47.90 on March the 5th. I think anywhere, 47.75 still keeps it intact. February low was 47.04. If we got down there, I think I definitely want to get out. This is stock 4.46% dividend yield here. So usually a little bit more of a conservative issue. And buy the dippers do sometimes come in. So this $48 level is interesting in DRI. Joel, we also have, moving on here, Boeing getting downgraded at Goldman Sachs, UTX getting upgraded at Goldman Sachs. Discuss.
Boeing Boeing has been having some troubles lately.
Yeah.
It had that parabolic run when it get to close to 140 or whatever. How high did that? Got over 140. Now pulling back. Now a downgrade, huh? Is that what they did? Oh boy.
Boeing from Goldman. It's the Goldman
Goldman?
downgrade. It's down a
Goldman
buck and a half.
Sachs?
Yeah,
Oh,
Goldman's been active today. They downgraded Boeing. They upgraded UTX. They downgraded CAG. Didn't they on Dover too? The DOV. I think they did they upgrade or downgrade Dover, Brent? I didn't write that one
we
down.
got
Anyways, we'll go back to Boeing.
They haven't been able to not. I mean, they got it down to a stick 28 here. But what Goldman is hoping for is that this the last two lows, 121.37, 127.38. That's your support level. Take that out. You could be trading under 120. You see if it gets a bounce up there the first time. But there might be a level if you want to whack it going through that. That would have it down over $2. But I don't think it's going to hold up today. Buck away. Let's keep an eye on 121.37.
Then you got United Technologies getting
UTX.
upgraded at Goldman Sachs, and it's trading up $1.50 here. So 113.77 is where it went out. It's trading up at 115.28 right now. So decent move here for UTX.
Trading up in the
Whoa.
pre-market here. Wow, 115.29. You just hit that high here. Ooh, juicy resistance level. You had a high at 115.29 on March 18th as well here. So trading at resistance opens up there to above 116. But let's see if you get follow through here through that 115.28 level.
Dennis,
I heard dinging. What was that dinging?
I was gonna say, whenever you hear that ding, it means that the news desk just posted some quote hot news item. The hot news item just posted BlackBerry will be selling the majority of its Canadian real estate holdings, about 3 million square feet of land and space.
Is that
And its stock is kind of just sitting
It's not
here. I'm
doing
just
much.
looking off that news. We actually are popping a little bit. So we popped from like 950. We're up to 964 here now. So they are trying to buy it here on this news. I don't know if that's good news or not. What do you think, Joel?
I think that J.C. Peretz is happy about this.
JC Peretz is bullish. Was he saying on the show yesterday he thinks this thing could double?
Yeah, he said he thought it was could go to $18 here, so
Wow.
that's a pretty bold move. He liked the support level. Didn't really move much yesterday. Wow, that $9 level was huge support. Trading up into the pre-market, still not at resistance though. The last two highs, 964 and 971. After that, opens up to the $10 level.
$9, $9, $9. One more quick one, and then we're gonna go grab Joe Gits. And Taylor is popping big time here this morning, Joel. Golden Gate is announced a 9.5% stake in Ann Taylor, and ANN was popping on this last night, was trading up actually almost to $42. Pulling back here a little bit, trading at 40 and a half, but that still puts it up $3. And this is a nice move for ANN.
Yeah, and Taylor. These retailers either go way up or way down. This one's popping here. Got a spike up to 42 in the pre-market. That blows away the recent high of the year at the $39 level. Up 327 seems like a lot to me. You did have a lot of resistance at 40 back in '07 and '08, and then you need to go back 43.50, but the ways away from here. Right? You want to hear a quick Ann Taylor story, real good, a real quick
Okay,
one?
just throw it at me.
Real quick. My buddy Chris Wallace, when I was working on the oldie desk, you have orders. You have buy stops, sell stops, limit orders and stuff. Well, for some reason, this stock was probably trading at like 18 or 19. Someone came in with a huge sell order, and like $3, knocked the stock down $3,
Yeah.
and it triggered 100,000 share sell stop on the open. Okay, and he had no protection. He didn't have any of the order out on the floor. So it I don't know, it closed at like 19. It opened up at 15, and
Wow.
the stop was due at the low print 15, and before he could even figure out what to do, I mean, the thing popped up like 50 cents and then $1, and then he just, when he was still figuring out what to do, and we're like, sell, sell, sell. And he ended up getting rid of most of the position. But,
So how
man,
many did he end up buying?
he ended up long 100,000 and Taylor. 100. I mean, I traded some big positions there. I don't think I ever got over 50,000. 100,000. I mean, it was an aberration, but he didn't have a chance to put any for it. But
It's a
anyways,
sizable position.
yeah, we're running late here. We got to get Joe Gits. We'll be right back. Welcome back, traders and investors. It's Joe Gits time, President and CEO of Social Market Analytics. He uses the signs from out there in the Twitter sphere for short-term trades in the markets. We're on Quad Witch here. Joe, are you back at the office today, or are you working at home again?
You know what? I kicked the family out. I am working at home again today because I have an important date with basketball today.
What game are you going to?
All right, so hey guys, thanks for having me on. Look forward to be with you every week. I appreciate it. We're committed to making this kind of data available to the active trader, and looking forward to you guys getting some good information. We've got a lot of good stuff today.
Okay,
and
what do you got?
Our subscribers are already talking about ECYT,
ECYT.
Endocyte Healthcare,
Wow.
drug manufacturer.
That just popped here this little while. It's up 93% here now. That's got to be your biggest gainer on the day.
That's a huge day.
It is, yeah.
SBCF, which is one I had never heard of, Seacoast Banking Corp.
Wow.
Give that symbol again.
SBCF.
SBCS.
Seacoast Banking.
Okay, getting that one. Go ahead.
Western Refining. WNR.
These are all positive?
Yep, big time positive. And then the last one, number 4 is Merck today.
Merck.
Hey, there's
Yeah.
Merck. Stop and talk about Merck for a second.
What
That
do
was
you-
actually
yeah.
showing a little bit of relative weakness yesterday, but it is getting a little bit of a lift. What's the score on Merck?
Merck is a 3.9 this morning. 3.9 means it's 3 standard deviations more positive than normal. You don't get that high very often.
Not on a stock like Merck, probably too. So
Yeah, you're absolutely right. And then we've got a good amount of volume on that one too. So the strong, the social media positives today are significantly outnumbering the social media negatives today, which is interesting. And that's not as usually we get a positive outnumbering the negative, but it's pretty strong today. We also have Flowtech Industries, FTK,
Okay.
specialty chemicals.
positive?
Yes, sir. 3.8.
That one got a good lift yesterday before pulling back. So if you think the breakout's going to follow through, Joe Gits statistics there are saying the same.
Joe Gits thinks so. So let's see what they're saying. Let's see what they're saying about Flowtech Industries today. And that one is, see if they group it in with any other securities. A lot of times you'll see people are talking about a group. And that one is, okay. Talking about a bunch of individual securities. But by the way, on that one, we are seeing some tweets that saying entering overbought territory. Some of the most
So
recent
those would
runs.
be bearish. Those would go.
Those would be bearish, yes. So watch out for that one today, guys.
I
All
think-
right,
What do
let's
you-
go.
I think that what's interesting about this one, Joe, is that you really struggled here at the 27 and a quarter level, 27.17, 27.05. Really, that was where the breakout, the official breakout was from the 27.50 level. But boy, oh boy, you are opening into some support here at the $27 level.
Yeah, if it
Okay.
does open down, yeah.
All right,
What's
well, that's cool.
what do you got on the negative side there, Joe?
All right, negatives are always a lot more fun. Symantec.
Oh yeah.
SYMC. Everybody and their grandma downgraded that this morning.
Walter Energy. WLT.
Walter, wow, that was destroyed yesterday. That's not looking pretty at all in the charts. It's bouncing a little bit here this morning, but you're looking for some follow-through action there.
Yeah, oh, absolutely. That's a strong one. And then I don't understand this one because they just opened a new Walmart by my house, and my wife should be an earnings pop for that company. WMT, negative 1.8.
Walmart with a negative rating after a big pop yesterday. That one is
Yeah.
interesting. That 74 level on Walmart has been absolutely enormous. We bounced out of that area yesterday, didn't look back. Stock closed near the highs. Technically speaking, it actually looks pretty good until you get to 76, where I think you might struggle, but that's interesting that it's negative today.
Yeah, trading up in the pre-market, you do have multiple highs over the $76 level. 76.18 was a high, and then 76 even. I mean, it's traded up in the pre-market, but I don't know,
All right.
100 shares.
Well, watch out for that one then. Walmart, negative 1.8, which isn't significantly negative, but it is number 4 on the negative list today. So there's a lot of good stuff. Let's talk a little bit about some of the standard names. Let's see what we got on the standard name.
Twitter. I'm curious on Twitter because we took out 50 finally there yesterday, and I've been calling. This has been my little scenario analysis here, but I've been calling a breakdown through 50, and then thinking it's going to bottom in the 49 handle somewhere, and then eventually catch people shorting through it, and then maybe try to lift up again. It's already lifting a little bit here at 50.40 this morning. But what is the social media saying?
Negative 1.318, not significantly negative, but that is a negative score. All right, let's see what they're saying.
Yeah, they did sneak it through there yesterday. I didn't even notice that because the market was rallying, but Dennis, it did. It got down to 49.64. Bounce closed above 50.12. I mean, it'd be interesting trading up in the pre-market. Just give you guys a little bit of a heads up here. It looks like we got a seller at the 50.50 level. Over the last hour, have been running resistance there. So you break above 50.50, you might get a little move higher.
And we've got some people talking about buying Twitter 45 puts this morning.
See, people bearish there. Violin Maker is asking about First Solar, and that stock has been hot.
Oh my gosh, that has been popping all over the place.
Were you getting readings on that yesterday?
Yeah, we've gotten a ton of stuff lately on First Solar. I don't know where it is right now, but right now, tell Violin Maker, come on, man, reach out to me. I'll give you some good stuff. 1.277.
So it's kind
all
of
right. So
not significant.
First Solar, okay. Some guy talking about how he stepped in front of a freight train this week on First Solar. Stock rating reaffirmed by Bank of America a little while ago. We're talking about getting into April 50 calls. So, oh no, which was he talking about?
Yeah,
That doesn't
boy,
make
I
sense,
tell you,
does it?
it's been a heck of a run in this thing. If
Whoa.
you're playing this Violin Maker, and I know this is a volatile child, but keep an eye on that close there. If you don't hold that, you pulled 3 sticks off the high, close 70.48. You hold, boy, I tell you, a lot of people, if they traded this a swing trade, for the week or whatever, you traded 54.75 on Monday, almost a 20-point move. I think that close is a much more important level to me than anything else on the chart. That's the highest close in this thing since 2011.
What about some of the other social media stocks and some of the other momos? Because we've been seeing a little bit of sector rotation. Some of the financials were hot yesterday, but the social media, Facebook was weak, Twitter was weak, Tesla was weak. What are you looking on Facebook?
Yeah, so Facebook, all 3 of those are negative. Facebook is a negative 0.2, not really significant. Twitter, we already talked about, negative 1.3. And to give you an idea of the positive nature of social media this morning, Twitter was number 8 on the short list this morning.
What about Tesla? What's the Tesla score?
Tesla is an absolute zero. It's a negative .013.
That means the Bulls and the Bears are jockeying for their
Yeah,
social
they're trying to figure out
sentiment.
where we're going.
What about Netflix?
You know what they are talking about there? They're talking about, just to step back to Tesla for a second.
Sure.
Social media is talking about some pending decisions on their dealer problem. So they might be looking for some volatility there.
I'll tell you, these two stocks, this Tesla and the Netflix, are looking eerily similar here, just hanging above major support. Tesla has a gap to fill here. Major support for Tesla, 228.45. You hit that level, then you hit 228.32. So $7 away from there. Nick Shaheen putting in there. Tesla's flagging a bit. DJ, how about the Wild Child F?
Hey guys, on Netflix, literally a minute ago, the score dropped significantly.
Oh,
Whoa.
good.
On Netflix. I actually just went and looked. It dropped so significantly, just not even a minute ago, that I went and looked at the raw data. So Netflix is down significantly in the last minute.
Netflix, you sure? I mean, I didn't tweet anything, but this is sitting on support 416.50, 417. Hit those levels above that yesterday. Keep an eye 416. You could a good vacuum. How about FEYE?
SEYE.
Frank.
Fire Eye.
Fire Eye.
Shareholders have been getting a little bit of fire in the eyes here the last couple of days. This thing's down like $12 in the last 2 days. What's this social?
All right, let's see what we got. And on the short list today, on a lot of these tweets, are Chipotle Mexican Grill is being mentioned with Netflix. Can you give me that symbol one more time, guys? I'm sorry.
FEYE. Frank Edward Yellow Edward.
Let's see what we got on that one.
I mean, it came into a support point here. Not really, what was the low yesterday? 67.
You know what? It's not in my universe for whatever reason. I'm not getting anything on FEYE.
We'll have to add that one.
Keep an eye on yesterday's low for FireEye. You did have another low at 68.66 here, getting a little bounce here, so might find some support those two levels. I wouldn't get me real carried away about shorting it though under yesterday's low.
There's a whole pile in the chat here, Joe. If you can stay in the chat too after you get off and just answer, because we've got a lot of people interested in their stocks. One last one. J Dot's asking about Media General, which is MEG. The stock's trading up here this morning over $2 from 17.34 up to 19.44. It just ticked to. So.
Oh my gosh!
You got some action on MEG.
Yep, it's 1.6.
1.6. And one last one.
Positive.
One last one is BlackBerry. Yep. BlackBerry just broke some news at 8:30. They're selling real estate, and the stock is now up 27 cents. With JC Peretz on the show yesterday, he thinks this could be one of the best plays of the year. What's Social saying?
Okay. Social is slightly positive, but not statistically significant yet.
Okay, what about the market? Just what about the overall market here to wrap things up? We're going into quad,
the overall market is strong. There are a couple other names that I want to get in. Number 10 on the top 10 list is still 3.19. The market is looking very positive today. So just a quick on some others on the long side. You've got Jabil Circuit, JBL, XLNX, Legg Mason, LM, and Tibco Software, which is an interesting one. Tibco Software.
What's that?
TIBX.
Okay, TIBX.
All right. So, guys, I love the chat room, so I will be hanging out. If you have any questions, drop on. Hey, guys, with this information, you can consistently trade ahead of the market. Go to our website. Check us out, socialmarketanalytics.com, and we'll give you a month for free. No problem.
Okay. All right,
Thanks,
man.
Joe.
Thanks,
and
Joe.
If you can
Have a
stick
great
around
weekend,
the chat,
guys.
Thanks a lot, buddy.
All right. Bye-bye.
Balances here happening just before we go grab Chris Nagy and Dave Lauer this morning. All buy imbalances across the board. We know on the quad which these imbalances flip all over the place, so I don't put a lot of relevance. They're huge. The buy imbalances are as big as you'll ever see today. But that being said, we know funny stuff happens on the quad witch, and those could flip around, get offset. We'll give you an update as we go further. But we're going to have to take a quick break. We're going to go talk some market structure. We're going to go grab Chris Nagy and Dave Lauer.
Welcome back, traders and investors. It's time to talk a little bit of market structure here with Christopher Nagy and Dave Lauer of the Core Group, King of Retail. Chris is the founder and CEO of the group, a 25-year veteran of Wall Street. Dave is president and managing director of Core. Guys, how you doing this morning?
Doing great.
Doing great. Thanks for having us on.
So, guys, obviously, we've had a lot of talk here lately on high-frequency trading. We've had the New York State Attorney General, Eric Schneiderman. He's now targeting high-frequency trading. In a recent speech, he cited advantages that high-frequency traders have, including co-location, early access to market-moving information. He referenced one large high-frequency trading firm, which obviously is Virtue, as having only one losing day in the last 4 years. Now, you're seeing a lot of talk on Twitter. You're seeing a lot of talk from the media saying that if you only had one losing day in the last 4 years, you must be having some significant advantages, because how is that possible? Now, for my own personal trading, I'm a little bit not on board with that, because I know market makers back in the day had a lot of days where they didn't lose money. What are your guys' thoughts here? Do the high-frequency traders, do they have some significant advantages over here, or are they just getting paid to provide liquidity?
Yeah, it's a great question, and I think it's something a lot of people are focused on, because sometimes something like that sounds maybe too good to be true. I have to agree with you, Dennis, that it's probably the wrong thing to focus on. I think when you're talking about a market maker that's diversified over 10,000 products on a daily basis, and you can even have a reasonably low win rate. You can have like a 53% win rate, and still it can be shown that you won't have a losing trading day for years. So it doesn't seem like that is a symptom of something to be concerned about. I agree that there are market structure issues, obviously, and I agree that there's reason to be concerned about things that are going on in the data centers, and to have some concerns around the way data feeds are distributed, for example. But I don't think that this is something that is honestly that big of a deal.
What do you think is? Go ahead, Chris.
Oh, sorry. I was just going to say, one of the things that I think brings a lot of questions about is, back in the day, it didn't seem that the advantages you were talking about, Dennis, were so unfair as they appear today. So, for example, back in the day, everyone touted that we're a member of the NYSE, right? Where today it's a little bit more cloudy and murky to understand exactly what those advantages are. And the rule structure set just isn't very clear. So I think that's where the focus needs to be on the real issue.
Like, do you think?
Yeah, I totally agree.
Like more transparency maybe on some of these issues too.
Exactly.
Now, okay, so do you believe though that these HFT firms, because everybody's coming out and saying these guys have unfair advantages and the playing field isn't level? Is Grandma, is she on a level playing field here, or is there some stuff that needs some improvement?
So I'll talk a little bit about Grandma. There was an article out yesterday.
Yeah, that's what I'm referring to, the Bloomberg piece there.
Yeah, that Bloomberg story that was out yesterday talking about, Grandma can be on the same playing field. And coming from the retail world, I'll tell you that nothing could be further from the truth. Grandma is not on the same playing field as the high-frequency trader, not even close to that at all. And while there are some firms out there, I know of a couple of firms that do offer co-location, you're still dealing with the latency of your location, and you're just not at the same level at all. Most of the big brokerage firms that are out there aren't even close to having co-location like a high-frequency trading firm.
Now, what other advantages here, Chris, are you concerned with? Like, obviously at Core, you guys are looking for more transparency, and you're looking into some other issues. What other advantages do you think that, how could we level the playing field a little bit more?
Dave, you want to take that?
Yeah. I think that especially from a retail perspective, we're really focused on a couple things like, again, transparency and disclosure around market quality and broker routing decisions. We're really focused on payment for order flow. I think that that's a really important issue that we're looking to confront. And then from a technology perspective, it's probably a difficult thing to solve. I think we need to be looking into ways to incentivize speed less and the price more. We need to be looking at some of the techniques that they use in the options markets over in equities, and we need to be looking at different techniques that they use around the world. Things like the trade at rule, which are good, which are done in Canada and Australia, might make a lot of sense here. So as you push more volume back onto the exchanges from the dark pools and the internalizers, I think you start to see the playing field even out a little on the exchanges. I think you see more different time scales in terms of trading strategies, a diversity of trading participants, which is what I think we're lacking right now in the domination of high frequency.
And that's a big thing that I've discussed here on the show here in the past is this diversity in the market participants. I'm always kind of looking at liquidity. And you can say when you take a snapshot in time and look at the NBBO at any given time, it looks like there's a lot of liquidity, especially on your S&P 500 stocks. But how much of that liquidity is made up of high frequency liquidity, which vanishes, obviously, we know, when the going gets tough? Do you think it's the majority of our liquidity there?
Yeah, and I think that's something that when you're looking at the what the quote is and what the makeup of the quote volume is, that's 99% HFT. So even if HFT is only 50 to 60% of trading volume, that quote is 99%.
You think the quote is 99% HFT, and that's scary because obviously we saw on the May 6th flash crash, and it's not. I don't think it's about a matter of these guys coming and putting affirmative obligations on them and making them quote. I think it's more a matter of trying to get some more diversity in that quote. Getting traditional participants maybe to quote. Chris, how do we do that? How do we get more different types of participants to start providing liquidity?
Well, one of the big issues really that's evolved to the structure that we have today has been one of regulatory. So I'm sure you've spoken on your show quite a bit about this regulation NMS or National Market System. That was brought into place almost 7-8 years ago now. And really from the regulatory landscape, there's been near zero change with regulations. However, the structure itself has advanced much, much more than it has in the past 2 decades. So that we're really behind the 8 ball in terms of that, and modernizing and updating a lot of those regulations so that we can have more transparency to understand what's going on, and then to create structures that bring back different and more kinds of liquidity are very important today. Also, to bring a lot of the practices of brokers executing orders off of the lit exchanges in dark pools, which has had a really big impact on overall liquidity, bringing that back into the transparent markets is a big issue. And getting the regulations up to date with that is going to be very important.
Yeah, it seems like our entire market here is starting to go dark. If you've looked at off-exchange trading levels over the course of the last 5 years, where were we, like 19, 20, 25% maybe 3-4 years ago, and now we're kicking up towards 40. And the CFA Institute, who I'm involved with, I'm on their Capital Markets Policy Council, they came out with, it was a study that I helped with too, actually. They came out with a study last year where they were looking at internalization and they were looking at payment for order flow, and they were analyzing off-exchange trading. And what they found in this study is that as off-exchange trading climbs to a level above 46%, that price discovery and spreads start to widen and price discovery starts to become impaired. On some individual stocks, especially some of your small caps, some of those individual levels are up. You'll see 1,000 or 2,000 different stocks that have levels of off-exchange trading above 60%. So on those stocks, it's basically saying that they're probably going to have wider spreads. So here we come now, and we're looking at, the SEC is looking at doing a tick size pilot here to try to encourage liquidity providers to come back into the small cap space. Will this tick size pilot, if we widen the spread, will that encourage new participants to come and start providing liquidity on some of these small cap stocks? Maybe I'll start with you, Dave.
Yeah, and honestly, I just don't think so. I think that the tick size pilot kind of misses the point. And I'm just much more in favor of a trade at. I think that is a much more effective mechanism and sort of a more something that theoretically to me makes a lot more sense. If you're going to take something off the exchange, if you're going to impair price discovery, then there needs to be substantial compensation for that. I don't see a good argument against that.
Now,
I know
what
Chris
if you
has
were
a lot of thoughts on this.
And Joe Saluzzi, and I've actually been saying it too. What if you were to do the tick size pilot with a type of trade at? And just for our listeners who aren't familiar with the trade at rule, it's basically a rule that gives up the displayed quote priority over the undisplayed quote. So if you're sitting there on your bid at $25 and somebody wants to sell to you at $25, your fill you'll get filled before the before the off exchange stuff gets filled. That's kind of in a nutshell what the trade at is trying to do. Now, this is just a concept. It isn't an actual rule, so we don't know how it would actually work. But that's something what they're doing in Canada and Australia. Do you think if they were to incorporate that trade at rule with the tick size pilot, would that be a better way to go about it?
Chris, you want to talk about this because
Yeah, actually,
Chris has spent a lot
I'll
of
take
time
this
on
a little
this.
bit. Yeah, so Dennis, I actually testified before Congress last July as part of the Jobs Act, which is part of this whole tick pilot. And in my testimony, I recommended the need for a trade ad. There was actually the final bill that was passed, which is H.R. 3448, is a much watered-down version. So there is a form of trade ad in that bill, but essentially what it's doing is it's asking the SEC to do a study and make a determination of where that pricing should be, and it doesn't really require a real trade ad, if you will, provision. So the real concern with all of this is if you widen spreads, and Dennis, you mentioned the CFA study, do you simply push more order flow in the dark? And if you were to unleash that today, absolutely that would be the case. So the small investor, the retail investor, is going to be totally disadvantaged by this, and there's no real indication that there's going to be more liquidity in the market. By forcing that price improvement level, so what trade at means is if you're going to trade on an internalized basis, you have to do so by a meaningful level. So by forcing that at a real number, and maybe if the spread is a nickel, you say it's 2.5 cents at the midpoint or in the middle of the bid and the offer, then that would be a reasonable place before you internalize.
And
Things
all
like
your
that are real.
Yeah, all you're trying to do there is like encourage the liquidity provider because that's, like our firm at Bright Trading, I get this all the time. I was talking to a trader yesterday and he's sitting on the bid and he says, I can't get down on my order. I'm trading some small cap stock. I've been on the bid for 4 hours here. It keeps trading at my price or right in front of my price and I can't get filled on the thing. And it's such a frustrating thing as a trader, a limit order trader, to have your limit order sit there, look at the consolidated tape, look at it trade, for a sub penny above your price and not get filled. I don't think it's much of an issue, on like a Johnson Johnson or stock that's trading at a penny because you can just pay out the penny. But if you're trading some of these small caps, they got a 50-cent spread. Who wants to pay a 50-cent spread? So in essence, what these internalizers are kind of doing is forcing you to pay the spread. And it really discourages liquidity.
Yeah, kind of doing? No, that's totally happening. I mean, when you put a limit order out there, how many times have you seen as a trader that your limit order is essentially being used as a backstop, and then you see all these prints going up 6 decimal places and a penny in front of your limit order while you're not getting filled? In a tick size study like that, if you were just to widen spreads to a nickel, that would be exacerbated to a large degree.
Well, you're just widening the spread for the internalizer to make a bigger spread.
Yeah, but do you think that if I look at that like really this whole problem got started when they went to pennies and it was supposed to be better for the individual investor, but now you're enlarging a select group of institution to trade at sub pennies. I mean, don't you think even if you made it eliminated that for a couple of these players that it would really knock out some of the high frequency because they'd actually have to step out a penny or two ahead of these orders instead of fractions of a penny.
Well, one thing I'd like to point out real quick is a lot of times people think that high frequency are the ones that are doing a lot of that subpenning. It's actually a lot of the internalizers.
Okay.
It's actually a lot of retail order flow that gets sent to the Knights, Citadels, UBSs of the world that's printed at those levels. The HFT firms are actually the ones, as Dave spoke about it earlier, they're most of the time ahead of you on the transparent limit order book. So I completely agree, this sub-penny price improvement or this sub-penny printing that's going on in the marketplace really needs to be stopped to a big degree. And that's something Dave and I are actually working on.
Okay, and you guys are working there at Core Trading here, and we do appreciate you guys obviously fighting for the little guy and fighting for the retail trader. Tell us a little bit about Core Trading there, Chris. Like, what do you got on the tap there?
Well, I'll let Dave kick it off with that.
Okay, sure.
Yeah. So, with Core, what Chris and I decided to do is basically, stand up and say, we see some problems, we see things that need to change, and we don't really see people working on it, especially not down in D.C. We see a very big presence in D.C., and it's all of the big banks, and increasingly this Modern Markets initiative as well. So we thought there's really a void there, and it needs to be filled. So Chris and I are focused on pushing rule changes and pushing modernization, as he was saying, of some of these regulatory issues that will increase transparency and that really focus on improving markets without sort of being beholden to a P&L and being beholden to any conflicts of interest. So, we sort of think we're unique in the market in terms of what's going on in the market structure debate. And then we're also available for consulting. We're doing workshops, market structure workshops, intro to high-frequency trading workshops, order routing and order flow, that type of thing, trying to spread the understanding that we have of markets as practitioners. And then finally, we have this informational service. So on our website, you can sign up and you can get monthly market structure reports, as well as all sorts of different analytics and visualizations of data such as market quality data, broker routing, and payment for order flow data. And then we're also tracking every filing from self-regulatory organizations, all the exchanges and FINRA, and summarizing them and commenting on them on the website and in the monthly report.
Well, thanks, Dave. Like, it sounds like you guys are really doing a pretty good fight here for the little guy, and that's the whole thing. You go in Washington, and the big guys have all their money and all their power. We need more guys like you guys fighting for the little guy and fighting for fairness and fighting for a level playing field.
Right,
So,
right.
That's what we're trying to do, Dennis. Thanks.
Yep.
Okay.
And that's one of the interesting parts that Dave and I bring, me coming from the retail background and Dave from the technology and high-frequency background really gives a lot of experience to help address a lot of these issues.
Okay, we've had Christopher Nagy and Dave Lauer of Core Group LLC just discussing, the inner workings of the market. You see a lot of things going on. These guys are studying the markets and sticking up for the retail trader. As we say, Grandma, did they get that Grandma from me? I say the little old lady from Pasadena. I wonder if they stole it from me. But Chris and Dave, thanks a lot for your input on this, I guess you could call it a controversial subject, and we'd certainly like to have you on again.
Appreciate
thanks,
it.
guys.
Look
Thanks for
forward.
having us on, and people can check out our website. It's kortrading.com.
kortrading.com. So, and if you get a chance, I don't know if you're on the site there, if you're in the chat or whatever, we've just wrote in the Core Trading there too in the chat. So if anybody from the chat's got any questions there, we can get them along to Chris and Dave too. Thanks a lot, guys.
Awesome. Thanks.
Thanks, guys. Bye.
All right, Dennis, we're getting our high frequency trading talk in and discussing the structure of the markets. We try and give a well-rounded view of what's going on.
Yeah, and you got the imbalances here. Let's move on to a little bit of market talk here. Obviously, S&P futures are just kind of treading water here. still up 4 points, but you've got those buy imbalances still across the board. We talked about those about a half an hour ago. Obviously, we still got 20 minutes before the open. A lot of these buy imbalances might get offset, but if we do open with these buy imbalances right now, and I'm seeing, just to put it in perspective, 5.8 million to buy in Bank America, 5.4 million, not these are million, 5.4 million to buy in GE, 2.1 million to buy in JP Morgan, 1.7 million to buy in Citigroup, 2.7 million to buy in Wells Fargo, 2.8 million to buy in AT&T, 3.4 million to buy in Pfizer, 2.2 million to buy in Verizon, 2.4 million to buy in ExxonMobil. These are some of the biggest buy imbalances I've ever seen here. But that being said, options quad, which they do get offset. Wouldn't surprise me if they get offset even in the last minute. But as of right now, the market would open a lot higher if those buy imbalances stay put.
Okay. All right, Dennis, thanks for the update on that. We are going to move over to Mighty Joe Young with some morning headlines.
You know, I realized something, Joel.
Yes, sir.
We forgot to preview the guest this morning on the show.
We as in me or we as in you?
I'm going to say you. I'm going to diffuse
Okay.
responsibility on this one. Also, I didn't get to highlight the fact that one of our Benzinga writers was a special featured guest on CNBC Fast Money last night with going up against Herb Greenberg. Were you able to catch that video yet, Joel?
No, I didn't. I didn't get a chance yet.
Well, that doesn't help this conversation at all. Moving into today's editorial headlines from around the globe, search planes flying deep into the southern Indian Ocean found nothing on Friday that could be from the missing Malaysia Airlines jet, Australia's acting prime minister has said. The planes are part of an international effort to solve the nearly 2-week-old mystery of what happened to Flight 370 and the 239 people on board. They are looking for 2 large floating objects detected by a satellite off the southwest coast of Australia, about halfway to the desolate islands of the Antarctic. I was thinking that this is a lost scenario, and then Evan Brandoff, one of our BD guys here, suggested that perhaps aliens are involved. I don't know if anyone else has a theory they want to throw into the chat, but we're looking for topics right now.
That's real original.
Which one, the aliens or Lost?
No, the aliens. Where's Evan?
Yeah, well, Evan, I hope you're listening, and you can see the sentiment around that idea is similar to the one I shared with you. If the phone rings and the caller says he represents the IRS, be suspicious. That's the warning from federal authorities who on Thursday said a nationwide phone scam has stolen $1 million from thousands of unsuspecting people. The imposter claims to be an Internal Revenue Service representative and tells intended victims they owe taxes and must pay using a prepaid debit card or wire transfer. An IRS Inspector General office said the scammers threaten those who refuse to pay with arrest, deportation, or loss of a business or driver's license. The IRS has received more than 20,000 reports about the scam. J. Russell George, the Treasury Inspector General for Tax Administration, called it the largest scam of its kind we've ever seen. I thought I remember hearing about this last year as well. But, you know, just keep in mind, ladies and gentlemen, the IRS does not have time to call you. They send you those threatening letters, and then they levy your bank accounts before they even get on the phone. Also, I don't think you can be jailed over a debt. Isn't that right, Joel?
I wouldn't know.
It's true, you can't. You can file bankruptcy or what have you, but if you owe the IRS, they're not going to imprison you. Bitcoin. What was that, Eric? Al Capone, that was tax evasion, and he was also a criminal. That's why they were trying to get him, so they busted him for tax evasion. That was Al Capone. Eric is asking about Al Capone. Bitcoin exchange Mt. Gox said it found nearly a quarter of the bitcoins it previously said were lost, likely raising questions about how much of the missing total could eventually be recovered. Mt. Gox Chief Executive Officer Mark Karpelès said in a document released on Thursday that the company had found 200,000 bitcoins in a wallet or Bitcoin storage file that the Tokyo-based company no longer uses. That brought the number of bitcoins still missing to roughly 650,000 from about 850,000. The discovery raises questions about how much of a role hacking played in the loss of the virtual currency from what was once the world's biggest Bitcoin exchange. When Mt. Gox filed for court protection in Japan on February 28th, Mr. Karpelès said in a technical issue that enabled users to make fraudulent withdrawals was possibly behind the loss. The 850,000 missing bitcoins announced at the time represented roughly 7% of all bitcoins in circulation and were worth more than $470 million at market prices at that time. Samsung's second-generation high-end Galaxy Gear smartwatch will set you back $300, the outfit has confirmed. It has also said that its Gear 2 Neo and Gear Fit will go on sale for $200. AT&T will be taking pre-orders for all three on March 21st, starting today, with shipments starting early in April. Netflix is paying the fiber optic piper, but it doesn't much like it according to the first comments from its CEO since the U.S. Federal Communications Commission's net neutrality rules were declared unenforceable. Some big ISPs are extracting a toll because they can. They effectively control access to millions of consumers, said Netflix head Reed Hastings in a blog post today. He calls out Comcast, Verizon, and AT&T by name, saying that ISPs are willing to sacrifice the interests of their own customers to press Netflix and others to pay. Netflix customers have experienced poor video quality and long buffering times, which led the company to pay off certain U.S. ISPs, its internet service providers, to alleviate the network congestion. Microsoft has attempted to clarify the circumstances in which it will look into a Hotmail account and possibly disclose information about its users. The firm released information about this because it was revealed earlier that a Microsoft employee leaked its software to someone using a Hotmail account, and that Microsoft found out about this by examining his inbox. Microsoft explained this will happen in some circumstances, and that is just a fact. In a blog post on TechNet, Microsoft Deputy General Counsel and VP of Legal and Corporate Affairs John Frank said that privacy is important until something that could be considered worthy of inspection by a court comes along. And with the death of Fred Phelps, the vitriol spouting vitriol. I've never even heard that word before.
Vitriolic.
No.
Yes.
Thank you, Brent.
Thank you, Brent.
Leader of the Westboro Baptist Church who picketed military funerals and espoused hatred for gays. The future of his church is hazy. Phelps, 84, died late on Wednesday, according to online postings of his church. The cause of death was not reported. It's unclear whether the so-called church will survive the death of its founder, said Mark Potok of the Southern Poverty Law Center, which has closely monitored the group. In some ways, it was a cult of personality. Phelps, who started the church in Topeka in 1955, would go on to launch a campaign to picket the funerals of gay men and lesbians with placards that read, "God hates them." I mean, I think we all know what sign he's talking about. Congregants drew the harshest criticism for picketing the funerals of fallen U.S. military personnel. Phelps said the deaths were God's way of punishing a country that enabled same-sex relationships. It was a pretty good day when he died, actually, I'll have to say. As the anniversary of Cobain's passing approaches early next month, rumors have stirred on social media that police might be reopening the case. They are not, they said in a statement, noting nothing has changed about that assessment 20 years after his death, but they are releasing new photos of the crime scene. The released photos do not include images of Cobain's dead body, but the dingy, scratched images of syringes, a tainted spoon, a lighter, and other personal belongings strewn across the floor will likely bring back sad memories for many fans. On April 10th, Nirvana is set to be inducted into the Rock and Roll Hall of Fame. Former Nirvana drummer Dave Grohl, along with Courtney Love, have started that they will put aside differences and be on hand to be part of an event in honor of Kurt Cobain. No trivia today, Shubs? What do you got on your calendar? Let's see. What artist was at number 1 on the album chart with The Breakthrough in 2005? That's today's trivia question. What artist was at number 1 on the album chart with album The Breakthrough in 2005? Anyone on the desk know?
2005 Breakthrough. So it was an individual artist.
Individual artist who is also female.
Madonna.
Well, you were close.
Okay.
It's Mary J. Blige.
Oh, I
Blige, as my mom likes to say. So that wraps it up for today's editorial headlines and trivia tidbit. Just a reminder, ladies and gentlemen, the show would not be possible without our dear friends at Options House. It'll give you 150 commission-free trades for signing up for an account through this page. There's buttons at the top, at the bottom right. If you love our interviews, if you love Dennis and Joel's banter, if you love the fascinating factoids we give out on the show, click on through, open an Options House account, get 150 commission-free trades, and represent Benzinga's pre-market prep. It's free for all that listen, and we would greatly appreciate it. So, that it's about 9:20. This is probably the first time this week that I haven't gone through the opening bell. Brent, are you around here somewhere?
I'm clapping. I don't know if you can hear that, but
I
yeah.
can hear that. Thank you. So, Brent, I asked
Yes.
Dina to pull out her Kurt Vonnegut book collection
Ooh.
so that I can start sorting through those in
And
addition to the other required
she has
reading
like
that I have
30.
for work.
She has like 30 books.
I believe she mentioned she has Cat's Cradle
Ooh.
and some other stuff I can't remember, but I'll find out when I get home
I
this
can't
evening.
wait. You can read Cat's Cradle this weekend.
I will try
If you're
to
bored,
do that.
you could do it.
I will
It's
definitely
a
try
very
to do
quick
that.
read.
If there's any other Kurt Vonnegut fans in the chat room, please speak out. We'd love to hear from you.
Of course
Let
there
us know
are.
your recommendations. And Brent, it'll make Brent and I very happy.
Yes, it will.
So what's going on today, Brent?
We do have.
Tell us about all those semantic downgrades this
I
morning.
was going to. Yeah, we have a couple upgrades, a couple notable upgrades this morning, but just a number of notable downgrades this morning. We have on the upgrade side of things, Goldman upgrading shares of United Technologies from neutral to buy. UTX is the ticker. Looks like Joel is pulling up some UTX. Am I wrong? Am I right?
Yeah, I mean this is popping up. I don't see a lot of volume on this,
Yeah.
but you did get a trade up to the 115.60 level. Another high 115.56. Just really nothing on the daily chart to point anything out there. Just the next level after that would be one. He had a high in the 116 handle. Where the heck was that at? Boy, way after that 116.50. So I don't know. I'll have to keep an eye on that pre-market high at 115.60. See if you get follow through that level.
All right, this one's got a little bit more volume. JDS Uniphase,
Oh.
Juliet Delta Sandy Uniform, got an upgrade at MKM Partners this morning. JDSU now rates MKM now rates JDSU with a buy. Sitting just under the $15 level, it looks like.
Wow, this thing is clawed its way back. Made a high just hanging out at the $15 level. A lot of volume going off. 14.96, 14.97. Had a nice day yesterday. 14.71 was yesterday's high with a 55 close. So if you're trying to buy it on the cheap here, maybe get a pullback right in between those two levels, 14.65. Once you clear this $15 level, not sure if you have a big seller there or not, things really open up. Not a lot in the rest of the 15 handle. You had a high at 1661 back in October of last year, but that'd be a pretty big move for JDS Uniphase.
On the downgrade side of things, as Joe was previewing there, Semantic shares did get downgrades at MKM, Cowen, Baird, Jeffries,
Ooh.
and UBS. That's 5. That's right, count them 5 downgrades on Semantic following news last night that they fired the CEO. I believe it was the CEO. Yes, it was the CEO.
The bloodshed is really starting to subside here a little bit here. Took it down on the initial news to the $18 level. Had a low at 18.63 and just been skimming above it here for a long time. Low that you had back in 2013 or closer down to the $18 level, but just the way it's hanging here at 18.60, like to see it hold that and get a little bounce. If not, going down to the $18 level.
All right, so jumping back over to Goldman, they downgraded a couple good ones here. Boeing downgraded
Yeah.
from buy to neutral. I know we did talk about this one. The one I don't think we talked about was they also downgraded Conagra, CAG, from buy to neutral.
Well, that looks like someone is battling Goldman here on this downgrade here. We just gotta trade up. Has it only down 46 cents now. The close in Boeing here was right at the high, 123.73 to 123.90 here. So with the downgrade, you get another 70-cent rally here. Have some potential resistance. Super extra major support here. At the double bottom from the last 2 days, 121.37 and 121.38. And then ConAgra?
Yes, sir.
They're covering. What are they doing at ConAgra?
They are upgrading it from, downgrading it from buy to hold, buy to neutral.
Not a real significant thing. This thing was clawing back to fill the gap, and now Goldman is derailing them here. Let's see. We tried to fill the gap up to 30.80. Got near that area yesterday. Not real close though. 30.32. Trading down 30 cents in the pre-market. Use that close as a resistance level. 29.99. Yesterday's low. I mean, if you want to fade Goldman on this one, you've had multiple lows here at 29.42 to 29.65 level. So opening up into support after that downgrade.
Thanks for that, Joel. So also we have a downgrade by Cantor Fitzgerald on Walgreens this morning. They are slapping the sell rating on shares of Walgreens.
Why
WAG.
why would they do that?
Why? Oh, why?
This is the old sitting on the cliff chart formation here, and they've pushed it off the cliff here. You've been really holding up at the 66 level, 66 to 66.20 level. They got this thing all the way down to 65.34. That's not a good print. Bouncing up to the 66. I think if we can hold that 66, be able to shake off that downgrade, rally back up here. Maybe to the close of 66.50. I just think even if you do get down under the 66 level, you're not going to get to that pre-market low. I'd see people stepping up 65.80 to 66.
All right, one more for you this morning. This one came in a little bit later in the morning session. A lot of these notes come in very early in the morning and Eastern time, that is. Argus downgrading shares of Herbalife from buy to hold this morning. And like I said, this one came out. I seen it hit the wire around 8:30 or 9. That's a little bit later.
This is an interesting one. It had to spike low when the news came out of the FTC
Yes.
getting involved, and it hung up there, bounced to the $60 level. But as you notice, when it took out that panic low, which was right around the $55 area, 54.59, when that took that out on Monday, rallied back to that level one time, and then it's been straight down since. Looks like Ackman is fighting back here a little bit. Things open up though. I mean, not a lot under the $50 level. I did see a low at 49.30 back in mid-July here, but we'll see if someone uses this nice round number 50 to bring things in.
So you're kind of a little concerned that there's some air below 50 bucks, correct?
Yeah.
So I'm looking at the end of the day chart from yesterday. It kind of plunged through 51, and then on the upside, that was a bit of resistance. If we can hold over $50, are you kind of leaning more towards that 51 level?
Yeah, I don't know. I mean, I would use the the low and the close. It's a double good number there. Wow, 50.30 was the low, 50.79. I mean, I don't know. I mean, it's just looking at this daily chart here. It doesn't really show any kind of signs of a
Momentum
bottom.
is to the downside, that's for sure.
Looks like they're juicing the S&Ps here right near the open. Those buying balances are getting people excited. We got the S&Ps making a new high in the pre-market session here at 1773.75. We'll see if those buying balances are going to get some follow through off the open, or if Dennis out there shorting things at fair value is going to keep things in line. You did have a high on March 11th at 18.75 and a quarter. We're $2 from here. Let's see what kind of reaction we get in these stocks off the opening print.
So guess what today is? Besides triple witch or quadruple witch.
The 3 kids' birthday in my 3rd grade class.
That too. Also, I was gonna say we're gonna get 6 IPOs this morning. There's 6 scheduled IPOs right now. Those IPOs we have, I'm just going to read the tickers and the company names off to you. THNX is Global Force. Ruthagen is RTGN. We have A10 Networks, ticker is ATEN. Amber Road, AMBR. Border Free, BRDR. And Versartis, which is VSAR. Not seeing indications on all of those. However, Versaris expected to open for trade at 10:50 a.m. This is according to the Nasdaq, and then also Border Free expected to open at 10:25. I think that A10 Networks is an NYSE SEC, so we're not going to get an indication on that one. That one's just likely going to open. Did I hear an opening bell?
You did, and we are opening up about 6 handles higher. We've ticked 72.75, pre-market high 73.75. Let's just follow up on some stocks
For all
that.
that action right before the open, it's gone pretty much right at the open.
Well, it's still here. We're gonna try the pre-market high of
All right, right now.
73.75. We're right there. Let's take a look. Rockin' Hilly's popping here with DIGN. I have to take a look at that ticker. Not super familiar with that one.
D-I-G-N. I don't think I D-I-G-N.
Am
I
I, am
don't
I
think I
am,
know that one.
are my eyes wrong?
Let me see.
Is it not
Let me scroll
DIGN?
down.
Could you help the old man out
Let
with
me
his?
scroll down to my chat. And if anyone is wondering what the heck we're talking about, there is a nice chat, a nice community that we got going. It is below the screen share on the Options House page. So you have to kind of scroll down a little bit to get to that.
Yeah,
one.
we want to get you all involved in the chat here. S&P's continuing higher here through the pre-market high, 74.5. We'll be looking 75 and a quarter was the high that you had in the index. How long ago was that? Not too long ago. 75 and a quarter on March 11th. We are one tick away from there, so we'll see if that poses any resistance. But you have gotten nice follow through, at least off the opening print here. We'll see how this resistance holds up at 75 and a quarter.
I just can't find that ticker Rockin' Hill he's talking about.
Yeah, I think he's and there's Coric too. That's a 4 symbol one. Yeah, see, I think he's throwing us some curveballs here.
Keeping us honest.
Keeping us on our toes here. Let's see. Boeing is shrugging off this Goldman Sachs downgrade. As of yet, we just want to alert our traders here. It has popped above yesterday's high, which was 123.90. Hit 124.48 off the open, but has fallen back here. So, see if Boeing can regain that 124 level. Some other issues that we talked about. This Ann Taylor got a big old bounce here off the earnings. Opened up, tried to kiss the $42 level, 41.97 high. Perhaps you do have a big seller at the $42 level. Other issues that we covered in the show today. What were some of what was Joe looking at? What were some of the ones that he was bullish on?
I had my headphones off during the interview, I'm not going to lie, but maybe we can scroll up and see if he dropped any into the chat.
Yeah, he was bullish. This SBCF here. And Seacoast Banking, let's see what kind of activity we're getting off that. Gapped up here. Not moving a whole lot, but we did have a trader, I think it was J-Dot or somebody, looking at some possible breakouts here. And that $92 level, I said I didn't see much off the 93.5. I got a spike. Let's see if they let you in near that opening print, or you're having to try and pull it back. Open 92.78, came back down to that 92 level. Volatile trade, still like to see it holding 92 here. Another possible breakout was Halliburton, and that was at the 57.50 level. Let's see if they gave you a shot to get in there. Currently trading at 57.77. HAL, the big oil refinery thing, 57.89. Tipped out to 58. Didn't like you feel the gap here. We'll see if this 57.50 level can hold up in today's session. S&P's continuing higher here, trading above that resistance level, 75 and a quarter. Just made a high here at 75.75. So things are moving to the upside here on this expiration. AT&T, Dennis was looking for that continued move there on the upside. Thought you might see 34.50 today, and you already saw that. Even traded up to 34.80. So tacking on the Verizon, a little bit of a trailer yesterday, but did get a chance near the $47 level to get in.
Hey, Joel, take a look at that open in Ann. It was the big winner, and it is continuing higher, up about 4% from the pre-market trade.
Oh wow,
Yeah.
moving considerably
Yep.
higher. Opened up, man. If you weren't afraid of heights and you bought this thing off the open, took a little heat down to 41.33. This is really blowing away all resistance levels that we had. 43.50. Have we got up that high yet? I guess you can use 43.50 if you absolutely have to have a target on the upside. 43.50 was a high back in November of 2006, so we'll keep an eye on that level as the S&Ps continue higher. Looks like Berkshire Hathaway 2 is next could be a new all-time high for the stock. Let's take a quick look. Brick B, as we call it here on the pre-market prep show. Getting at a good level here. We've just made a high BRKB, the recent high in the issue. Just keep an eye out here, folks. Got to 125.91 on the 13th. We just hit 89 in today's session, so potential resistance to 126 level. So that's at that time of the day where two guys that still have two teams left in the final 48 now.
Oh yeah, I guess it is final 48. It's not quite. I was about to say the round of 32, but we're not down to a full 32 just yet. That was a wild set of games yesterday. Some serious upsets.
Yeah.
Oklahoma losing, Harvard winning their game, setting up a big Harvard and Michigan State matchup, which should create some, chirping in the office, shall we say?
Yeah, we'll see. Yeah, Fernando, the Harvard grad in the office that we have here, we'll see how many points he's going to give you. But
personally, I'm predicting something that looks a little bit like an and one mixtape, but we'll see.
Okay, all right. What's on your radar for today?
Well, I know Brent was going over that slew of ratings in Symantec.
Yeah, let's go on. Oh, let's check that.
That was really interesting because you had the company coming out and they basically fired their president and CEO. And I mean, you don't really see that a whole lot. Sometimes it's like president and CEO resigns, and okay, that was he basically got sacked, but they're trying to make it look better. In this case, the company actually fired him, and I've never seen a management, and they reiterated their guidance, by the way. And I've never seen a management change trigger this many analyst downgrades. So there was 2 price target drops, and I think 5 downgrades, and these are not from small banks. These are from big name banks. And it's just causing a huge sell-off. It just blasted right through that $20 level, which was psychological. And if you see that the chart kept kind of nearing that on the daily, and then just sitting down here in the 18s now, I guess is where we're at.
Yeah,
Wow.
it's taken out the pre-market low. Actually opened 2 cents off the high of the day. So. Not a lot of love here. I mean, not even like in-your-face rally here after that down open. So you really can't be touching the stock on the long side until it went back through that open 1871, 1873 high. As this issue drifts down, I can go back. I can find support back in December of 2012 and January of 2013. You had some lows around the $18 level. So it's not whooshing down there, but really that could you be looking at a potential support point.
Yeah, no kidding. I think that's going to be a really interesting one to watch today because so many analysts have piled into the downside. I'm waiting for an analyst to come out and say maybe this leadership change is a good thing, or and defend the stock, or say this kind of action is ridiculous on a management change. I mean, I guess we'll see if that's going to happen or not, but just very, very interesting to see where this all went with that kind of movement. Another one that we saw moving to the upside this morning was Dry Ships, DRYS, Delta Romeo Yankee Sandy. Now, this one was interesting because it owns a large segment of a company called O-Rig, which is the Ocean Rig drilling or whatever. It's Oscar Romeo India Golf is that ticker. So that company issued a large offering of senior notes, and for some reason that got traders to bid Dry Ships up. Dry Ships owns a large part of O-Rig. I guess they were happy about how the debt offering went. Maybe in the release they said that they're going to use the debt offering just to refinance current debt. And maybe they were worried about how much interest was getting paid and that was cutting into the Dry Ships profits, or perhaps they think that this is going to be used for further investment. But either way, it got dry ships moving in the pre-market this morning.
Yeah, it popped up though. 352 open, 353 high. Just kind of pulling back a little bit. Kind of a lazy chart here. I guess you do have a trend line coming up off the lows here, but 360 was yesterday's high. If you want to use that as a target on the upside.
So another one that we did have moving was also PBF. Papa Bravo Foxtrot company did issue. They announced a secondary offering this earlier this week. As PBF Energy, they were doing 15 million shares. They priced it at 25.50 this morning. Now this was a fun little release because they did not show the actual pricing. They said they tried to hide it in the headline. They just said price is it. They didn't. Usually they don't put the price in the headline, but usually the price per share is sitting in the body of the press release. Well, in this one, they tried to hide it, and they said this is the aggregate amount that we're raising. So they made you go through and do the calculations. I think they're trying to slow the algorithms down or something like that. Well, it priced at 25.50, and as you can see, it's really taking a hit on the shares right now, trading down almost 6% from their close yesterday. Joel, do you have any thoughts on PBF?
It's interesting that he picked that 25.50 level here. It's trading right in there, as we talked about a lot of those times. Those act as a magnet for the stock, make a decision. 25.50 was the low on March 6th, so look for a lot of trading at that level.
So we had a couple of earnings reports this morning, one of them being Darden Restaurants, Delta Romeo India. EPS came in at 82 cents, which was right in line, while revenues came in at 2.23 billion
lobster.
versus the expected 2.26 billion. Let me see if I can pull up some guidance from Darden Restaurants there. Looks like we did not have any guidance, but I can make a basketball reference here. Did you know that the founder of Darden Restaurants is the primary donor to University of Virginia's business school, making it the Darden School of Business, and Michigan State, if they win the next round, they play UVA. So that's the closest parallel I can make to NCAA tournament right now. So.
Well, this thing's had quite the ride in the pre-market. Something they didn't like, took it down under $48. Really only significant level. We just hit 50.60. You did have a couple other highs at the 50.50, 50.60 level, then a 50.67 high here. So those were several highs in the month of March. So let's see if we get back up there again. S&P 500 futures losing altitude. Got through the 75 and a quarter number. If you could take a couple points worth of heat, it only went up to 76.75. Now peeling back here, 71.75 session low. I mean, you can't tell me there's support in here until we get to 1867, because that was the area of three highs. So that's what I'm looking at for support on the downside.
So, what do you think about Nike? I think we should probably take a look at them.
Yeah,
they did report earnings
Nike
after the close yesterday. EPS came in at 76 cents versus 72-cent estimate. Revenues came in at $7 billion, as expected, $6.7 billion. And here, let me grab some guidance for you. Let me see. I guess we got that in the main feed, not in the calendar. But yeah, I think the guidance was not as hot as investors were looking for. Let me pull that up for you. But yeah, what are you thinking of Nike's chart right now?
Not good. 77.10 high, and then you got a 20-cent bop up there to 77.31. Almost had a ways to go to fill the gap. Couldn't quite do it. Looks like the street was leaning the right way yesterday in this thing as they knocked it down. No real major support levels here. Now that you're going through the 76s here, nothing. There's just nothing on the chart here. I'd wouldn't even try and stick it out there at 76 unless you're looking to scale in, cover is short here. But 75.30 was the low on February 21st, so we'll keep an eye on that when it gets to the $76 level.
The other one that reported earnings this morning was Tiffany's, Tango India Foxtrot. EPS came in at $1.47 versus $1.52 expected. Revenues came in at $1.3 billion versus expected $1.31 billion. So miss on the bottom, miss on the top there. Another consumer brand, another retail brand not doing so hot. They did release some guidance as well, and I think this is really what's hitting the shares. Fiscal year 2014, expected EPS 405 to 415. Street was looking for 428.
Traded down to 87.80 in the pre-market though, but having holding up much better than that in the session. 90.20 open, 90.68 high. Went down to 89.34. That coincides with the exact low that it had on February 21st. at 89.34. So you may have a potential area to lean on. And Dennis is just, pointing out some of these exaggerated opens here. Let's just take a look. CVX opened at 118. Let's see how much higher that was. Probably had a real buying balance. 118 was the open, and we've come in straight $1.25 since then. Dennis, I hope you got a piece of that one. There was another high at 118.14 on January 24th, and then the Merkster, I think that also had a buy and balance as well. Let's see how high Merck opened up. Merck opened up 56.57. You would have had to take a little heat on that, 3 cents, Dennis, and then it quickly fell $1.
Well, it is 9:46 already, shockingly. So looks like that's all I got for you.
Yeah, wow, S&P's holding in there, up 7.75 points on this quad witch, 76.75, the current high. The only number above that is the all-time high at it's 1880.50. We'll be keeping an eye on that. Coming back on the downside, when this is going down, it surely doesn't do it with much enthusiasm. I have to call the major support at the 1867 level. That was the area of the last three highs in the trading session. So everyone have a good trading day, good weekend. We'll be back with you on Monday.